day. He like quiet, same country living, 20 more years slipped away. Well, the war took his bait. Bombs killed his lady and left him with only one eye. His body was battered, his whole world was shattered. All he could do was just cry. While the tears were falling and he was calling, answers he never found. We hopped on a freighter, skidded the ocean and left England without the sun. Now he lives in the islands, fishes the pilots, drinks his green label each day. Writing his memoirs, losing his hearing, but he don't care what most people say. 86 years of perpetual motion. If he likes you, he'll smile and he'll say, give him some of it's magic, some of it's tragic, but I had a good life all the way. He went to Paris, looking for answers to questions. And brother, so
Good morning, everybody. We'll get started here in about 6 minutes or so. Couple things I have my eye on. Watching for gold come down into a demand zone. We've already jumped into Canadian dollar. And we have, yeah, I need to close that one out.
Indian time up his trigger. Honey, drive the sucker to the end of the road.
Yeah, we had a good trade on that one over the last couple of days, but it's starting to base a little bit. Let's see.
At the end of the road. Tennessee Williams and Henry.
Yeah, that was a great short. But we're getting a nice little base. We'll go ahead and grab the profits. We need to roll out to another contract also. And let's see, we have corn. No, I took a trade on wheat. Corn is setting up though. You're on the September contract for wheat.
At the end of the road.
Now let's bring up corn. Yeah, just waiting for corn to pull back a little bit. Well, we'll cover that and more when we get started here. All right, give me about 3 minutes and we'll start our live session here. Hey, good morning, Pratt. Yeah, let me jump back out there. Yeah, I have a chart on gold. Daily chart, we're still consolidating a little bit. And I have an area of that I'm interested in going long. About 32.61, 32.49. And I'll talk a little bit more about that once we get started at the top of the hour. Okay. That's the area I'm looking for, that long entry. All right, I'll give you guys a chance to look over the morning prep. And we do have a Fed speaker coming out just after the pit opens.
Got a house down a back road, I got a flag. On the front porch, I got a dog named Waylon. I got a driveway that needs paving. I got a boat with a two-stroke, a couple guaranteed to make you laugh jokes. I got friends in low places. Yeah, life is what you make it.
All right, there's our starting bell. Let's get everything lined up here. Hey, good morning, everybody. Happy Friday. We're gonna get started looking around. We did have one report come out, personal income outlay, PCE, came out. We do have a Fed speaker coming out about 9:15. There were a couple of trade setups that came just before we started. I pointed those out. We're still waiting for gold to come down to about 32.61, 32.49. Gold's down about 68, 70 points right now. We're looking for some demand. Okay. Now, on the extreme side of things, gold does tend to run about that 80 or 90 points when it has an impulse wave, okay, or a leg. So let's just take a quick little measurement. This leg down, pike up. Yeah, it aligns right with that 32.61. Now, I'm going to project out ahead of time. This is the place I'm looking for that turning point. I'm going to put an order out there about 32.61. That's still that'll put us about 80, yeah, about 70, yeah, about 80 points down. So we're 77 right now. We need to go down about another 15 points. Okay. So if you're new to what we're doing here at TMI, marketinstitution.com, and doing our live stream, we do forecast turning points, and we have very specific uh, place on the price chart. We're looking for that. Um, and this is one of those areas there. Okay, so I'm going to start off with just a couple of micros on this trade. I will manage my risk. I'll start off my initial stop about 32, 35. Okay. Now, make sure you size the position based off your trading plan and risk management parameter, dollar risk, okay? So I'm starting off with a couple of micros where I can handle the dollar risk, okay? The zone 3261 is where I want to enter, and my initial stop will be about 3235, okay? So let's scroll down, let's get that one in place. I'm gonna set this order up ahead of time because we got a lot to cover today. Let's see, 3261. Okay. And then I'll come in once I'm filled, I'll come back in and place a protective stop. Initial stop will be 3235 as we let kind of the drama unfold. Okay. So looking for a long entry on gold. And let's see. We do have the pit open on crude oil and natural gas. Today is the first day. I'm going to close this one here.
Order filled.
Just got that open range breakout trade that I will watch. Globex range is narrow relative to the daily ATR. Okay, and we take measurements of that to anticipate. And what we've documented is when the Globex range is narrow, less than 40% of the daily ATR, we often have some good trends, okay? Good move in price up or down, even on a 5-minute chart, okay? So we'll look for an entry. I'm a little more bearish on oil going out to the larger time frame. Let's come out here. Yeah, we got heating oil has a nice bear flag, and we know the correlation between heating oil and crude oil are very high. Okay. And so I'm kind of looking for that downward move to find some more demand. Okay. Looks like platinum is also racing towards a demand zone, 1325, 1305. Okay. Let's see. Let's go back to nat gas. Nat gas did hit one of our zones where we had lake base, and a fair value gap at the same place. Something we've been documenting. Excellent turning points, minimal risk on the trade. And these areas have been pretty easy to forecast as long as you know what you're looking for. Now, in the context of an uptrend, depending on the time frames you use for uptrends and so on, make sure you understand if you're taking a counter trend trade, yeah, you're going to stay in the trade a short period of time, and if you're taking a trend trade, you're going to stay a little bit longer. Today is the first day after last trade date on natural gas, okay? And generally that 1 week a month where we have contract rollover and last trade date on natural gas, also crude oil, okay? The markets are a little shifty around that time, okay? Big banks and institutions and suppliers are positioning themselves, okay? We also, yeah, so I'm not jumping right in. We're a little more than 50% of the daily ATR, and that usually tells me that Globex range compared to the daily ATR, these things might be a little more choppy around the open. Okay. Wow, good to see everybody. Lots of folks here today. Please let us know if you have questions in the chat. Happy to see everybody. We just had S&P hit one of our zones here, so we're going to be looking at taking a long on S&P. Let me jump into this. Again, make sure that your trade is set based on your risk parameters, okay? I'm going to start off with 3 micros on this. My stop loss will initially be about 6,000 203. Okay. So I'm going to enter at the market because it's hit my level.
Order filled.
I'm going to come back in and place a protective stop loss of 6,203 3/4. Okay. With those 3 micros, I'm risking about 71 bucks on that trade. Okay. This is an area where we anticipate there to be some unfilled orders. Okay. A couple other things that I'll point out that we talked about in the pre-market tips. Okay. S&P, NASDAQ, Russell, and the Dow are gapping outside the prior session's range, and often this leads to a gap and run. Okay. So these are little highlights around here that we watch for. Our pre-market routine is very detailed, things that we document and measure each and every day. Okay. Okay. I trade, I saw a question in there. Hold on a second. Question Candlestick says, when you take a trade on the MES, can I take a trade on the MNQ? Well, they do correlate pretty highly, but make sure you have the proper picture and setup. Okay. They have different personalities, and you have to understand, the volatility on the NQ is slightly different than it is on the S&P. And so we'll watch both of that. Now, even though the large market cap weighted stocks on the NQ and the ES are pretty much the same, the correlation is there, but the timing may be, and the risk may be slightly different. Okay. The thing I was going to come and point out here, we've had about 5 up days in a row, or today will be the 5th. We've had 4 completed up days in a row, and we anticipate today to be up, and then on Monday to be back down. Okay. A lot of times when we're looking at the daily chart and we're looking for consecutive number of candles, they tend to happen in 2s, 3s, 5s, rare for 8, and extremely rare for 13. Kind of the Fibonacci sequence of numbers. Okay. So we've got a trade on the S&P. Let's jump out and look at the NQ. Yeah, the NQ is pulling back, but it's not right in a good spot yet. Okay, so it's not like you can take, as following up on the question that was asked, jumping into, because you see a setup on the S&P does not mean that there's a trade setup on the NQ. And they both have different risk parameters based on their vibration, okay, or their kind of like their ATR, the average range there, okay? So I don't have the NASDAQ in a zone. I did have the S&P, and it fit within my risk parameters, so I jumped on that one, okay? Looking at the Dow, Dow is also an outside day, okay? Gapping outside the prior sessions range. This often leads to a gap and run, okay? Not a gap and fill, okay? We do have a couple of unfilled opening gaps, and these areas price is attracted to. If we were an inside day where price had not broken outside the prior session's range, the filling of the gap is very high probability. Okay. When we're gapping outside of the prior session's range, the gap fill is a very low probability. It still can happen, but it's lower probability that it will. Okay. And these are things we've documented over many, many years and in our observation, and we're sharing those things with you. Now, I don't expect you just to believe me outright. Okay. I want you guys to be able to take that information and then verify it for yourself. Reason behind that is that when you verify information that an instructor is sharing with you, you will take ownership of it. You'll see if it fits within your trading plan or it doesn't. Okay. Some people just don't have the time to do all of that, and they're good at just kind of finding that rhythm to get in and get out of trades. For me, I need a little more mechanical and step by step to go through it. Okay. So the little nuggets of information that we're putting out there are meant for you to verify that information. Okay. All right. So we're waiting the Dow. I have an entry on the Dow somewhere quite a bit lower. Okay. And let's see. Yeah, that's the Dow. I'm just looking at the smaller time frame uh, and looking for where we have demand. Now, it's okay if price is a little further away. Okay, it just means that, hey, we'll be waiting a little bit longer for the long entry. Russell, just as an example, this is one we took yesterday. Boy, it was frustrating sitting through that chop. Almost gave up on it a couple of times, but I left my stop in place. And we had a nice run up on that into the close. Okay. It's always good to have a past example. I think I have a, let me just verify. Oh, wait. Yeah, I have it in there. See, as we've been studying studying the different trade setups, okay, using the fair value gap along with the leg base, I've been documenting that information where price just kind of comes in, touches it, turns back down. Okay. And yeah, this was the start of that Russell trade. Just started off with a couple of micros and of course sat through that. It's just, I like to take examples of these because the more that you study these, the more um, you start to trust it. And we're not asking anybody to trust what we're showing on the price chart. We're asking that you verify it and see if it fits within your trading plan. Okay? So this is why we're using those levels. Sometimes it's painful just to wait for it, and I get that. Let's see. Okay, let's close that down, and feel free to ask questions in the chat. Okay. My team is also watching the chat and monitoring the questions, and I'm happy to answer those as we go through things. Okay. All right. So crude oil is pushing up towards the Globex high after the pit open, but we're not getting a lot of, and I use heating oil as an odds enhancer. Okay. Heating oil often leads crude oil by a little bit. Okay. About a minute or two. So as I'm paying close attention to heating oil, okay, it's right at a support area. If it starts breaking down, then I'm going to start looking for that opportunity to short on crude oil. Daily chart on crude oil. We do have the 50 and the 200 today on the daily chart. Price is right at that 200 simple moving average. Closing back above would be bullish on crude oil. But again, heating oil tends to give us a little more of that lead as an odds enhancer. Okay. Natural gas, again, today's the first day after the last trade date. Hey, good morning, Liz. And we're waiting for that to come into play. Okay. All right. Our trade setup on gold, we should expect a bounce off of the proximal line of our zone. Okay, a small bounce, but I'm looking for my activity to go long at that 32.61. I'm starting off with 2 micros. and that'll fit within my trade plan, my parameters, okay, that I'm looking for that to understand what that risk is, okay? So entering at 32.61, placing a stop loss 32.35, okay? And it is important you size the position. Don't load the boat, okay? Because loading the boat is too much risk. There'll be plenty of opportunity to add on to this position if this level holds, okay? We're still in the context of an uptrend on the daily chart, okay? We keep making higher lows, and we're going to look for another opportunity to make another higher low, okay? And we'll anticipate a profit target up there about 33.31 as we look at this initial trade, okay? Always important to look at how the exchange traded funds, especially if you're trading futures and you're trading the equity index futures. Remember, futures are a derivative instrument. They follow something. They never lead. Okay? Contrary to what people think, oh, the futures are up, market's going up. That's not true. Okay? Stocks are the underlying asset to these ETFs. Okay? So stocks move first, exchange traded funds adjust to the grouping of those stocks. Okay, and then the futures adjust based on the computer, the Globex computer, okay, that adjusts price up or down based on the underlying. So there's a sequence of things that happen. So by viewing the exchange traded funds, we can get an idea that, okay, IWM gapping up 46 points or 46 cents uh, in the direction of this short-term trend, okay, like an exhaustion gap. It's not a breakaway and it's not a measuring gap, okay, so it's more towards that exhaustion gap, okay, and we want to expect a little bit of a pullback, okay. Uh, Diamonds up a buck 26, gapping up. We're looking at 35.19, okay, or 435.19, and it's gapping up into supply. Okay. Now these are great trading opportunities. Price gapping into supply, we get that initial pullback. Okay. So it is counter trend. Okay. Counter trend, we're going to expect a smaller profit margin. Okay. And over the last couple of days, as we look at the SPY and the Qs, they have basically they just keep moving up and they're making higher highs. Okay. So we don't have any supply per se that we're going to use on the Qs and the SPY at this point. Okay. So we're going to have to wait for price to pull back into a demand area. SPY is gapping up a buck 32. Q's gapping up a buck 33 in the direction of the gap. It's more of that exhaustion move. Okay. Now, over the last this week, these sessions after the Sunday night price dropped down and has been rallying ever since. Okay, this is an impulse wave. Okay, and we're at the top, not the start of this impulse wave. What follows an impulse wave is a correction. Impulse, correction, impulse, correction. So as we start to prepare for the correction move, we have to adjust our expectations. Okay, shorter term profits at this point. Okay, now if you think about what's happening next week, well, next week on the calendar, we have the 4th of July. We also have the last day of window dressing on Monday. And then we got first, second, third. I believe the market's closed on the 4th and probably a short trading day on the 3rd. Okay. So we're already anticipating, based on July, the start of July, and the window dressing and all that fun stuff going on, after 5 up days well, after 4 today, possibly the 5 up day in a row, we're going to start looking for correction. Okay. as we anticipate going forward, today's session will be a little bit more, most likely a little bit more choppy. Okay. And as we're at the start of that correction. Okay. All right, let's come back, check on gold. Okay, price getting close. We're still about 10 points away. Now, 10-point price moving down another 10 points or $10, okay, is going to put us right about that 86, 87 dollar a point move down. Now, if you're looking at past uh, price moves on gold, especially on a daily basis or session basis, we can often see that gold does like that 90 to 100 point range. Okay. And it will be about 2 or 3, well, about 3%, 3.5% on the session. Okay. And we're looking for that bounce there. Well, good question, Liz. I know I'm not at the start of this impulse wave as we come back and look at the equity indexes. Okay. I know I'm not at the start of it. Okay. And anticipating that price has moved up, we're still buying or going long within that trend. Okay. Looking for small pullbacks to continue in that direction. Okay. Using the daily chart, I see that yesterday completed the 4th update in a row. Okay. Today possibly being the 5th. Okay. So what I'm anticipating is more of a sideways, choppy market condition as this and managing my potential profit expectations. Okay. Yeah, you can do that. That'd be great. Okay. Yeah, I mean, markets could keep going up, but markets could keep going up. We use some information outside the price chart to help us with in that anticipation. Okay. So after 3 nice impulse waves up since Monday or Sunday night, okay, expectations could be more of sideways, okay, being Friday. And also notice that the volume, wow, even NVIDIA has still lighter volume than normal. Okay, we're showing that we have now 9 Dow stocks up over 94 cents, and we have 2 that are down. That leaves for 7. Multiply that 7 by 2, and we get a cash value. Again, futures are derivatives, so they follow the cash market. So these are the large market cap stocks for the S&P. Okay. So cash equals positive 14, and S&P futures are trading at positive 11. Futures are slightly oversold relative to cash. Okay. And we look for that balancing out right around the session open. Okay. NASDAQ still waiting for a little more of a pullback. Same with the Dow. And also the Russell. Okay. Now, along the way and throughout our trading session, new areas can be created. Okay. But right now, we have to use the information that is available on the price chart. Okay. If we're going to buy in the context of an uptrend, we need to wait for price to pull back into a demand zone. Okay. Buy the dips. Okay. If we're going to continue to take a breakout trade to the upside, well, we need some resistance level to be developed so that we can participate in it. Okay. So on the Russell, looking for a pullback, smaller time frame. Yeah, I don't have a lot there yet. Okay. Our internals, let's do double check a couple things over here. We have got a nice hourly candle move up on the dollar. Based on a 10 and a 2-year yield, they're all correlated for the last 2 hours. Okay. Now that's a good sign. When the dollar and the 10 and the 2-year yield are correlated, trading conditions can be a little more favorable. The pre-market trend right at the open here is on the high side, 1.2, but it's not at our extreme levels where we're looking to just have a good jump, jump in, kind of all in. Our volatility index is trading slightly lower, pre-market VIX, okay? And that's showing that there's a little more fear a little more complacency and greed in the marketplace. And just before we start to open, let's get traders' sentiment at the open. And for the trader sentiment, we use the NASDAQ pre-market indicator. It's the QMI. The NASDAQ built this indicator or purchased it from the PICOS, the old PICOS, Philadelphia Exchange, and uses it now as a gauge for market sentiment at the open. Okay? This has a 92% correlation to trader sentiment. Okay, we're gapping up, so trader sentiment a little bit more on the bullish side. Okay. Yeah, we have been monitoring closely the Bitcoin along with the equity indexes to see if there's correlations. Okay. The 5, 10, 30-year bonds and notes, okay, basically the 10 and the 5 are just coming out of a supply, okay, and the indexes are dropping as well. Looks like we might,
Order filled.
yeah, we just got stopped out on the S&P, okay, and the NQ is also back in a zone. So let's look at the smaller time frame, see if we can find a way to get in to that. Okay. All right. Let's see. I got a couple other questions going on there. Ghost, a lot of our analysis in the morning is a combination of both. Okay. As far as technical analysis, you're seeing that I'm using that on the charts. Okay. But I'm also looking at things outside the price chart. What are those correlations? You got the dollar. We have the 10 and the 2-year yield. That is when they are correlated, the market conditions are a little more favorable. Okay. When they're not correlated, we get a lot of whipsaw, choppy markets. Okay. Now I'm just making you aware of that. That is my observation. It's what I believe to be true because of my observations. Okay. And in using that information over long periods of time of kind of just recognizing it, I've incorporated that into my observation of how the morning will open. Okay, what to expect? How do we anticipate the trading day? Okay, now just putting that out there, you too can also manage or just say, you know what? Let me check it out. Okay, verify everything. With anybody teaching online today, verify the information they're sharing. Okay. I use a lot of things outside the price chart as well as on the price chart. Okay. See, the index is gapping up outside the prior session's range does not make a trade. What's in the headlines does not make a trade, okay? But understanding what's going on outside, let's just say if you're driving a car, you drive a car dynamically, you drive a car as an individual operating it, okay? But you also drive as part of the crowd, okay? You can only go as fast as the traffic outside. So what is outside the price chart that helps you make your trade decisions, whether you're going to be bullish or bearish today? Okay. Now I want to come back to the S&P. Okay. Price violated that little area. I was stopped out. And now I need to find another place to re-enter that I can manage my risk. And for that, I'm going to drop down to more of a tick chart. And I'm just looking for those places. Now, we have all seen between 8 a.m. and 11 a.m. Eastern, okay, over the last, let's say 6-8 weeks, where markets get really choppy on the equity indexes, okay? Kind of hard to navigate. They're just really choppy, okay? Now that's when the banks and institutions are putting together their order flow between 8 a.m. and 11 a.m. Eastern. Now, demand zones and supply zones work best around that time when the banks and institutions are most involved, okay, in processing the orders for the other for their clients, okay. Excellent job. Thank you, Ben. No, Brian, sorry. All right. S&P looks like it might want to go lower to find some demand. I'm going to put the little blue dots on here. Now we're still waiting for that's pretty low. The zone I'm looking for to go long is down in this range. We use a combination of candles, leg base, leg base. And we do have economic report. The bank index is pulling back pretty sharply. And I'm noticing a particular pattern where we have the drop and then we have the base. Okay. So again, economic reports, tweets. Wow. Just noticed over here on the, and this is a fantastic website, and we're not associated with them. We're just, it's pretty cool. But the market on open orders, we see that there was a lot of sell imbalance on the Mag 7. Okay. So I'll be monitoring the news and stuff like that as we go through. Okay. And let's get these are the large market cap weighted stocks. Apple, Broadcom, NVIDIA. Now, biggest reason I monitor these is because the NASDAQ is a market capitalization weighted index, okay? And what that simply means is the large market cap stocks influence the price, influence the NASDAQ futures, okay? Large market cap stocks influence the futures more than the small market cap stocks, okay? So monitoring the large market cap stocks, I can see that, wow, Meta's up, Amazon's up, Apple's up, NVIDIA, but Tesla's down, okay? Microsoft kind of flat. So not all of them are going in the same direction. When they're all going in the same direction, then we have a very high probability that, well, not a high probability, we see the NASDAQ futures follow that, okay? Now, along with the that we monitor what's going on with the Qs. Stocks move first, exchange traded funds second, then the futures adjust. A lot of folks like trading futures because futures are a derivative. They follow the cash market. Okay. And when you have your stocks a little bit mixed, things are kind of choppy. Okay. Take a look at all the indexes together. Yeah, we see that the Dow and the S&P are making a move up. Russell dropped right back down to that support area. Let's go take a quick look at Russell, see if we have a, yeah, Russell's right at support. Now, Russell and the Dow still have more room to the upside um, to catch up to the Nasdaq and the S&P. Okay, and we're still between zones, so there's no place to jump in right at the moment. Okay. Yeah, let's move my set. Okay, so the 10-year and the 2-year yields, they're still just kind of basing along with the US dollar. Come look at some of our other candidates. I did get into wheat earlier, and we are in Canadian dollar. And I have bean oil still. Heating oil looking like it's going to start to break uh, as you've got a nice bull flag or bear flag. Okay. If heating oil starts breaking down, we're going to look for the opportunity on crude oil to go along with that direction. The euro just hit one of our lines right there and got a pullback. I wasn't there to take that trade. Okay. And let's see. Yeah, we can have we do put out a lot of information, and I don't get to capture each one of the trades that I put out there. Okay. Not in teach class and do the live stream and all that fun stuff. Okay. So I get into a couple of them. And let's see. Yeah, we have the 10-year and the 5-year also reacted off of the fair value gap within the leg base zone. Okay. Dow's moving up nicely. Okay. Yeah, the Dow and in Russell have the most potential upside, basically to catch up. The Dow this week finally closed above the daily 200 simple moving average, which is a little more on the bullish side of this. Okay. Russell is still under the 200 moving average. We have another high point right there about 2211. Once it gets above that 2211, then we'll look for the 200 simple moving average. But we got to find a way to get into it. Okay. And that's what we're waiting on now is a way to get in. Okay. We have a leg base setup. And let me just, so if I'm going to splice into the move to the upside, I'm going to look for price to pull back to that 2187. Okay. Now keep in mind, we do have the 10 o'clock reversal. 85% of the time, market will change direction, plus or minus a minute or two uh, around that 10 o'clock. We also have an economic report coming out, which would be the consumer sentiment. Okay. Then things should kind of quiet down. Okay. All right. How are we doing on gold? Okay, gold getting a little bounce. We expected a little bounce, but we have a planned entry about that 32.61. and our trade is already pending out there. Okay. Just like the banks and institutions, they don't chase price. They have a set price where they're ready to make a deal. Okay. And since banks and institutions control these markets, by them just simply waiting, and we expose that picture on a price chart of where they have been acknowledged they've been waiting before, we're just going to wait until price comes into our area. All right, what do we got going here? We are still in Canadian dollar. We're up about 15 bucks. I got about $95 worth of risk. Okay. Now keep in mind, I'm not using a lot of large size on this. Okay. And, if you're trading in a prop account, you need to manage what your potential risk is. Okay. And speaking of the proprietary trading firms and our prop account, we do have a couple of giveaways today from Elite Trader Funding. Okay. Now, Elite Trader Funding is one of those prop firms that we do a little bit of promoting with and work with. And they have given us some eval accounts where you can get started using the prop account. Okay. Now, once you pass the eval, then you'll move on to a funded account. Okay. And this is one of the best ways to get started in trading futures because you're not using your own capital. Okay. So let's see. We have three of those. Okay. And our team has also shared the um, contest requirements. So if you want to be one of the first three that get a prop account, we're giving away the evals compliments of Elite Trader Funding. And I'd say jump in and grab it. Okay. Especially on days like we have today. Okay. Size your position according to uh, your trade plan. Okay. Now, with a lot of the prop accounts, you get a certain amount of risk. So you may have to size the position down to 1 micro, 2 micros, or may even size it up to 10 or 20 based off of how your trading plan will work. Okay. So I'm not here to exploit, oh, look at what this guy can do with he's taken 100 contracts. Look at all the dollars he's making. That's not what we're about. We're an education company, themarketinstitution.com. We educate on how to find these levels and the turning points. Okay. So I am using when I'm teaching and instructing, I use a simulated account or I use my prop account to trade within. Okay. And demonstrate the trades. Okay. So as you can see, that's why we have I do a fair amount of teaching in this and educating. Okay. And there are some fantastic traders out there that jump in and grab 10 contracts on the minis and just, wow, look at the big numbers. But if you're new to this, that's the fastest way to blow up your accounts. Okay. Learn from everybody that's out there and then formulate your approach and your trading plan. Okay. Uh, Sheba, um, I've been trading only the NASDAQ and S&P so far. Would you suggest gold and crude oil? Now, what I suggest is getting that picture of a successful trade. Okay. It doesn't, in most of us, it doesn't matter the product we trade. What matters is that we make money. So it's more or less the picture on the price chart okay? Because there are days where the indexes are not going to give you a very good entry, okay? And then you start taking them boredom trades and so on, and you start taking little nicks out of your account, okay? Find a method and an approach, okay, that fits your trading style. And I'll share something with you just quickly here, because we do have some recordings out there that you can get an idea of what we do. I'm just going to bring up a past presentation just to give you an example, okay? So what we're looking for is the information on the left-hand side of the chart, okay? This information on the left-hand side of the chart helps us anticipate what we're looking for on the right-hand side of the chart. What information is over here? Why did I pick those levels? Well, as we go through and look at different trade setups, what's a picture perfect past trade? Well, this is a place I want to go long. Yeah, I want to hit that one. Okay, well, how did we forecast that? Well, we start to look at the information over on the left-hand side of the chart that's consistently there when price changes direction. Okay. And as we go through and start to examine past trades, say, oh, yeah, I'd love to have that short trade. Well, what was there? The leg base group of candles. Okay. Oh, I'd love to have a short trade off a high. Okay. What was over there? What is the picture on the left-hand side of the chart that allows you to have a desired trade? Okay. So I do appreciate the questions and what we what you're asking and love having all the new folks in here. This is what I like to teach. Okay. And then also, as you're adjusting different time frames, you're going to have slightly different pictures. Okay. What you want to do is work your way down into that leg base group of candles. Okay. And that's what we're doing right here. We got the S&P moving back up. We got that leg base group of candles. And we're looking for there to be potentially some unfilled sell orders around that point. Okay. Now we all know taking trades against the trend is elevated risk. Okay. So you could wait a little longer as price comes into the zone and then come back out as we're waiting for demand. Okay. When we're buying on the dips, we have to wait for the dip. Okay. But we can anticipate that turning point and train our eyes to see it. So thank you for the question over there. Okay, thanks, team, for asking the questions or answering the questions. All right, so we have S&P approaching that. How are we doing on gold? Yeah, the leg base was there, but I wanted a very precision entry. Canadian dollars being quiet. We do have, wheat worked out well. We're on the September contract, WU25. Okay, so yeah, our leg base group of candles and our fair value gap that was inside of that area. Price came down. This is another one of those that I'll take a snapshot of. The combination of a fair value gap inside of a leg base has given some very good entry points. Okay. Now I do have the same group of candles up on top where you adjust the time frame, you'll get a leg base, and we have a fair value gap inside of that. Okay. The time frame doesn't matter. Okay. What matters is you get the right picture. Okay. Now I'm showing you a couple of trades that I took this morning, and we have a few that are still pending out there. Okay. Yeah. Keep in mind, the last trade date was yesterday on nat gas. And each month, nat gas, crude oil, they roll from the front month to a back month. So we have contract expiration each month and contract rollover on nat gas and or some of these commodities. Okay. So around that contract rollover and last trade date, that happens 1 week a month on the crude oil nat gas. You may see that around the last trade date, we get a strong move back to the upside. Okay. Basically, they're rebuilding their position based on demand and supply and also prices out there. Okay. Now, a lot of news around nat gas and crude oil right now. Okay. We do have a nice fair value gap, that 3 candle pattern, and we have that leg base group of candles right there. Okay. Now this zone does not become active until it moves away from it, and then we'll look for price to retest it. Okay. All right, what are we looking at here? All right, we have S&P popping up. Apple and Nvidia are the two largest market cap weighted stocks on the S&P and the NASDAQ and the Dow. Well, I need to verify the Dow. Okay. So I know that on the S&P and the Dow. So I use the Nvidia and Apple as an odds enhancer. Okay. S&P, NASDAQ, and Russell are market capitalization weighted indexes. The larger market cap stocks move the index more than the smaller market cap. Okay. You want to always keep that in mind. Futures are derivatives. Now, the Dow is a price weighted index. So it has a little little different character to it. Okay. But all of these Dow stocks are listed on the S&P 500. Several of these Dow stocks, the large market cap weighted ones, are listed on the NASDAQ. NASDAQ, S&P, and the Dow are most correlated together. And of course, the Russell is the one that stands out on the outside. Okay. All right, S&P should be up in the zone. We have the bank index on looking a little positive. Now, the bank index is the BKX is also something that bigger players monitor. You don't want to fight the banks. Okay. If the banks are pushing money into the market, we follow the banks. Okay. Don't fight them. Yeah, I use this as a gauge. This is 24 national and regional banks that make up that index. Okay. And if the bank index is bullish and you see Nvidia and Apple going in the same direction, the index goes the same way. Okay. So again, things outside the price chart that help us gauge the risk when we plan a potential entry. Okay. Another leg base. Is that the VIX, or I'm not sure what VX is. I do use the VIX. Okay. Mainly just to see where the extreme volatility or fear or extreme complacency. Okay. And we're kind of on the, might have to make another range on this to see where that complacency is at. I also use the trend, the NYSE trend, to see the advancing issues over declining issues and advancing volume over declining volume to see if the trend is high, time to buy, trend is low, time to go, trend in the middle, kind of choppy. And that's what we're seeing right now. I also use the NYSE tick. We see if we have more upticks or downticks, or we're kind of in that range where we have equal number. Okay. Also monitoring the advancing issues over declining issues. Now, I don't spend a lot of time here watching for a trade opportunity. Think of this as a dashboard, like a dashboard on your car. You got the oil pressure, you got the temperature lights, you got the gas gauge. Okay. We don't stare at that dashboard when we're driving. We just kind of glance it over to see how everything is running. Okay. Oh, okay. Thank you, Liz. Yeah, I'll have to add that to my my study. Liz pointing out as she went and verified some information for us. Right now, right as of right now, NVIDIA has the largest market cap. Next is Microsoft, and then Apple. Okay, so I may have to rearrange my Apple and uh, I'll have to rearrange NVIDIA and Apple is what I use right now, but I'll start to include and monitor Microsoft and see how those correlations. Wow, I missed the time-based chart. Mm. Okay, so we got a time-based chart on the S&P, price moving up. I don't have a supply zone to take a trade short, at least on the time-based. Our large market cap stocks, yep, NVIDIA made a new high today. Microsoft, a new high. Broadcom not too far behind it. Amazon Meta seems to be the next candidate for making another all-time high. So we'll see how that comes into play. Okay. Yeah, I want to keep a close eye on the US dollar because the dollar right now, oops, sorry about that. The dollar right now has been basing the last couple of days, as well as the 10 and the 2-year yield. Okay, the dollar had a pretty significant move down. Okay, so the basing could be a drop and a base and a drop, which would then send the FX markets to the upside. Okay. This should also be just a bounce off of support and pushing price up, so a drop base rally. Okay. So as we monitor this, price breaking support is going to send the Canadian dollar, Aussie dollar, euro, Swiss franc, and stuff. It's going to send those up. Okay. Because they're inverse related to the US dollar. The 10-year and the 2-year yield are also something to monitor. The 2-year back below 3.7%. Okay. Now things get a little tricky when we're below 4%. Okay. A lot of folks are not really attracted to buying the yields right now because of uh, the low payout. Okay. Over a period of time. All right. We have Canadian dollar. Platinum has not reached our demand zone. And I'm going to start to look at crude oil. There's heating oil starting to heating oil in a downtrend. Yeah, I don't have a good place to enter. Okay. Well, I don't like it when I have no entry on these things. It's not just about hitting the button to get in. So, oh man, you missed that whole move up. Didn't fit my trade plan to enter. Okay. In the context of an uptrend, we like to buy when price comes back down to demand. Okay. Not just start chasing price. Although some people are good at chasing price and they do well. Okay. I have found that that has a very short lifespan, just hitting the button. Okay. How we doing with the giveaways, team? We got anybody jumping up to grab one of those prop accounts so they could start practicing and pass that evaluation? The prop firms out there, a lot of them are changing their strategies to attract more traders in the market. Okay. And they're producing payouts a lot faster once you pass their evaluations. Okay. Uh, oh, great. Thank you. Yeah, I like that goodness. Let's see there. Can you repost how to participate in the giveaway for that if we have any more? Each Friday we do a live stream, and Elite Trader Funding has been very accommodating to provide us with some of those. So if we don't have any left over today, uh, we'll potentially have some next week. Yeah, I saw the comment, being patient is good and so, but I need to know what I'm being patient for. Okay. And if I understand what I'm being patient for, it makes the waiting a lot easier. Wow, very nice. Yeah, I don't think there's a lot of folks wanting to jump in and go long. This is looking more like a short squeeze at the moment. All right, so one of the things, if you desire to take a long trade right there, okay, we were close. We did get stopped out of that earlier. Looking to the left and looking for that group of candles, okay? So we use a combination of candles, and I'm going to put a little blue dot on. We use a leg candle, a base candle. Base candles have the blue dots on them. Leg candles, where the body is greater than 50% of the range. Okay. Now, this didn't meet all my criteria, and of course, I was teaching at the moment and didn't get into that trade. But if you look closely, you can see that there's a leg, red leg candle in, base, leg out, and another base. That group of candles right there provided a range where to anticipate price to change direction. Every place on the price chart you desire to make a trade, look left. Adjust the time frame up or down to see if you have that leg base group of candles. Okay. Um, I don't expect a drop today. Today would mark if today closes positive, this would be the fifth up day in a row. I would expect a drop on Monday. Okay. Now, as we just looked at this desired trade right here, and we have the leg base over here. Look what price has just made. Okay. It has made an area where we have that leg base group of candles. Okay. Leg in, base, leg out, base. So when we're looking for a buy on the dip, a pullback, I will be looking for price somewhere right around between 62.10 and 62.02 as that opportunity to take a long trade. Okay. The more you study the leg base group of candles, the more you will trust it. Okay. I'm not asking you to trust me now. I'm just showing you that information on the left-hand side of the chart, which we had that leg base, which was right over here, was present well in advance before that price turn. Okay. Now, we can find picture perfect past trades on the left-hand side of the chart all day. Play the shoulda, woulda, coulda. Okay. Use that left-hand side of the chart to verify and train your eyes what to look for. Okay. Now, once you start verifying it enough times and it's like, oh my gosh, this stuff is pretty cool. Okay. Then you start building over to the right side of the chart to help manage expectations and know when to wait. In a perfect world, I would need to see price come back down to buy on the dip in the context of an uptrend. I'd be able to gauge my risk and use an opposing zone as my potential profit. Okay. Wow, these things are just not stopping. Actually, one really great way to make it turn go back down is to jump in and go long right now, right? After the last few sessions of having an impulse wave, I'm expecting more of the correction. Okay. So even, other traders out there, they'll look at this move to the upside. And if they're going long, they would like to see price pull back to where they could anticipate buyers. Okay. This is a lot of that ICT training. Okay. Pull back, just kind of looking at the peaks and valleys here. And if we're going to go long in the context of an uptrend, we would need to see price pull back. Okay. Maybe find that leg base in the right location. Okay. And going back to the other question, some folks, they trade just one product only. They trade only the NASDAQ. They trade only the S&P. But when I quiz those people about personality of the NASDAQ, they don't have the details, yet they're focused on it. Okay. What does it mean when the NASDAQ, S&P, or Russell, one of these indexes, gaps outside the prior session's range at the session open? Often means that there's a gap and run. Okay. S&P does have one little area that I'm looking at, 62.32. Okay. I'll look to take a trade off of that level. Okay. But when you start looking at, if you're only trading one product, what do you really know about it? What's the average swing up? What's the average swing down? What's the average duration of a correction versus an impulse as far as time? Okay. Now you become sensitive to that the more you pay attention to the charts. But you need to have a mechanical way of documenting that, measuring it, verifying it. until you learn to trust your own information. Okay. All right. So I'm going to look to take a trade short, counter trend on the S&P. Okay. Now, I mentioned counter trend trade, which means it's shorter in duration. Okay. We're not looking for a reversal. We don't have a reversal pattern. We're just looking for some unfilled orders up in this range between 632 and 641. Okay, so we got about a 9-point range. So I'm going to place that trade there. But before I do, I want to take another measurement. I've used the cash market, the stocks. Okay, all of these stocks are listed on the S&P 500 index. Dow Jones is a price-weighted index where everything has an equal weight. All the Dow 30 stocks trade on the S&P 500, so the S&P and the Dow are very highly correlated. So I take the number of Dow stocks that are negative over 94 cents and the number of Dow stocks that are positive over 94 cents. So I have 2 negative and we have 15 positive. So the net result would be 13 positive. Okay, multiply that by 2 to get a value of cash. Okay, 13 times 2 is 26. Cash market equals 26. Futures are trading at 33. Okay, another 5-point move up. Futures will be overbought by about 10 points relative to the cash market. Now, throughout the session, we see that futures trade at a premium and they trade at a discount. When futures are trading at a premium going into a supply or trading in at a discount going into demand, this becomes a piece of information that helps you gauge the potential risk. Okay. And we're always watching the time of day when price arrives in these areas, especially between 8 a.m. and 11 a.m. So what do you really know about the products you're trading? Okay. When price runs into supply or runs into demand on the quarter hour between 8 a.m. and 11 a.m. Eastern, probability of a successful trade is much greater. If it arrives early, it often will violate the zone. Now, why am I saying that part? Okay. Well, we're right on the quarter hour and price did not hit my zone. Okay. It didn't even arrive there early. So what does that tell me? Well, it tells me you're going to have to wait for another 15 minutes for that entry between 8 a.m. and 11 a.m. where the banks and institutions are completing their order flow. So I'm using information outside the chart and information we verified on the chart over many sessions that if price hits that 62.32 at the bottom of the hour, I'm going to feel pretty comfortable about taking that trade short as a counter trend trade. Now in counter trend, I look for a 1-to-1 and on the outside, a 2-to-1 type trade opportunity. Size of the risk, okay, as far as my price movement. Going with the trend, you have much greater longevity, okay? Oh, come on. Yeah, we need that price to drop a little bit so we can get gold to come back down. All right. Come back, crude oil. Heating oil is moving lower. We do have a leg base group of candles that have formed. Leg in base, leg out base. If heating oil continues to drop, and we already saw a picture of heating oil on the larger time frame, it had a bear flag. Okay, so if heating oil breaks out of that bear flag and starts to drop, we'll see that crude oil will follow, okay? Now, I'm using that leg base group of candles along with the potential move down on heating oil to plan an entry, okay? My large time frame, we have areas that have already been tested. Let's just get those out of the way. And if prices to move down, we would be looking at a target range of about $62 on crude oil. That's another, wow, that's quite a ways down there, isn't it? Okay. Right now, we can see that crude oil has been basing for the last 3 days. And if heating oil continues its move to the downside, we'll see that crude oil will look to move lower down to that $62. Okay. All right. Nat gas. Nothing. Crude gold, still waiting. Taking a little heat on wheat. Bean oil's caught up. Canadian dollar taking a little heat as well. Must mean the dollar is moving up. The dollar has an uptick while the 10 and the 2-year yield are moving lower. Yeah, so I do want to retouch on, a lot of folks, they say, well, I only trade one product. I want to get to know that one product. And that's fantastic. Okay, that's a great way to start. But as you start looking at a lot of picture perfect past trades, you will recognize that they all have pretty much the same price pattern. Okay. Just going through a couple of examples here. Okay. We have the basing, price dropped into demand, shot out of there. Okay. Let me go through this here. I'll just show you a couple of examples. Okay. They all have that basic price structure. When you have a trade identification, okay, you want to identify a forward-looking technique. So what was happening on the left-hand side of the chart that provided a trade opportunity, that desired trade? What were the shapes, the patterns, the structures, okay? And they run pretty consistently, okay? It's the same picture, okay? Find a desired trade that you want to participate in. Then look left and start finding the evidence. The leg base is that first thing to kind of look for. But as you start saying, well, there's leg base group of candles all over the place, and you're right. So which ones have a higher quality, better, okay? Not just the candle pattern themselves. It's where you find a support area. Identify a range where the sellers were stepping in, okay? You look at the price structure where price made a higher high or a lower high as price moved out of that area. Trade identification for a forward-looking technique. Identify the information on the left-hand side of the chart to anticipate what you desire to create on the right-hand side, okay? Trade identification leads to that trade management. Once you're in the trade, you identify, or before you get into the trade, you can identify where your stop loss, your trade entry, okay? Also understand your risk and properly size that position ahead of time, okay? We have hundreds and hundreds of different examples. And in this very brief presentation, you can see that, hey, there's information on the left that allowed me to forecast a potential turning point. Okay. It's not just the leg base. Okay. Identify what the trade identification has specific characteristics, and then you come over to the trade management. Okay. Cool stuff. A lot of that you can find on our YouTube and even in some of our, we do have some courses out there that you can learn more about it. Okay. Nvidia price moving up. Bank index is bullish. Apple is just kind of quiet. Okay. Now, it's always tough doing a live stream when there's not a lot of trade opportunities. Okay. Everybody wants to come in and make a trade. Okay. We've made a couple. Okay. But all-time new high on NQ. Again, there things that we looked at this morning to anticipate the choppier conditions. Okay. Uh, we have window dressing going on. We're starting July on Tuesday. Volume on a Dow 30 is higher than the past few sessions, but the last 3 sessions, we've noticed that the volume on the S&P futures has been much lighter. Okay, as the market's been going straight up, okay, monitoring the volume each day, you would then say, wow, market's shooting up, volume shooting down. That would be a negative divergence. I need to start being a little more defensive. Am I at the beginning of an uptrend or am I within an uptrend? Okay. All things to be reminded of. Oh, I did want to, we had a zone on Nike. Yeah. Price gapped up right into the sellers on Nike. Okay. We had a reverse leg base in that range. Actually, there's a leg base right there. Okay. The origin of a strong move down. And look at that. Boom. Now, you're not going to be able to trade everything. Like I didn't catch this one either, but look at what was here. We have a leg base group of candles over here, and price hit it and pulled back off of it. What should we anticipate on the next one? This is pretty profound, okay? Especially if you like a forward-looking technique, you have to anticipate, man, the euro's coming off of that nice. Heating oil, there's our bear flag. We're looking for an opportunity to get in. Aussie dollar pulling back, looking for that demand zone. We do have almost a bullish flag on that Aussie dollar, price coming back down to find some buyers. Euro found the buyers and pulled out of there. And looks like British pound is holding some of the sellers, also looking for buyers. Okay. And Bitcoin's been pretty quiet. Stocks are quieting down. A lot of choppy action on crude oil. Price is not in a demand or in a supply area. Would be an aggressive place to take a short. Okay. Let's look and see if there's any supply above this area. Okay, I have an area that I'm interested in because of the strong price move down from that area. So I'm going to look for that lake base group of candles. So I don't see it on a 5-minute chart. So let's go up to a 6-minute. Seven-minute. 7-minute is a wide range. You can see the lake base right there. Okay. Let's try 8. There we go. Let me open that up so you can see it. We have a leg in candle, base, a leg out, and another base. So we'll adjust that right up there. And this will be a place where we can look to participate in a short. $66.14, $66.41. Now, if we act on that short in that zone, we would need to see heating oil making a new low. Okay. We have a zone where we're looking for an opportunity to take a trade short, as long as heating oil keeps moving down. Oh, nice job, Liz. All right. Let's see. Any more questions over there? Oh, thanks, Gus. If you have any questions about our content and the pictures that we're looking for, just reach out. We do have a Discord room if anybody wants to jump in there. Usually during the trading session, after the live stream, after we just kind of hang out as a community, as a group. We have a voice channel. Let me bring that up. Sorry, coming up a little slow. So we do have a very nice Discord room. If the team can put that our channel link in the chat, that would be awesome. Here's where we have students looking posting their picture perfect past trades. Okay, you know, you find them, you learn how to trust them. Okay, but where I hang out throughout the trading session will be in this active income voice channel. So if you want to participate and hang out with us, love to have it. Okay. Matt also posts his trades that he's posting in here. Fantastic job on stocks that Matt does. It's all his trading. And he does a lot of um, documentation of that. Okay. Always the same, pretty much the same picture. Okay. Using the techniques that we teach. So love to see you, hang out with you, get to know you over in the Discord room. But our live stream is, we're going to wrap that up. I'm going to look for an opportunity to go long on the NQ between about 719 and 684. See if we get that pullback. On the S&P, 6,207, 6,201, looking for an opportunity to go long. Russell's all over the place, yeah. Let's clean up the chart. Russell has potential for much more upside, so I'd like to have a nice place to get into it. Still waiting for that pullback. Okay. Dow. We do have some areas up above on the Dow where we could look for opportunity to go short. And waiting for that pullback is going to be tough. I mean, it's like this one is just kind of running, running, running. But in order to go long, it's going to have to find some buyers. Okay. And I think we covered all of them. And we're also still waiting on gold to come back down to that level. Okay. Be patient. Have a good, solid trading plan. I'll see everybody next week in our live stream. I wish everybody a good trading session and come and join us in the Discord room if you have more questions or just want to have a community to hang out with. Okay. Thanks, everybody. Thank you, team, for posting all that. And we'll see everybody in the Discord room, or we'll see you next Friday. Have a great day now.